My name is Nick, and if you don't know me, I've been trading for the past decade in Forex and crypto and stocks. I've made millions of dollars in all markets combined, and 2 days ago, I had the biggest trade of my entire Forex trading career in a day. So I have it right here. This is my free Telegram channel. It's where I share all my trades and analysis, and you can see right here I made $150,000 after swaps and commissions, $134,000 basically in a single day from this trade playing out. I took this trade on Monday and then I closed this trade on Wednesday. It was a simple sell at resistance and price dropped. And I'm going to break down this trade here in today's video because of how big of a deal this trade is for me. It was super nice. It was super sweet. I shared the analysis. I shared everything, the whole duration of time for this trade in my Telegram. I'll put a link in the description in the pinned comment if you want to join my free Telegram channel. It's free. You can click the link, join in like 5 seconds, and you can follow my daily trades and analysis. So what I did on USDJPY, I went into the TradingView replay mode and I forwarded this back to like a couple days ago. So a couple days before the trade set up. And I want to show you guys my thought process because I see a lot of people trading doing so many things that don't matter, and they're doing all these things at the cost of things that really do matter, such as keeping things simple and controlling risk. So the way that I trade is very, very simple. You'll notice my chart background is black. You'll notice the candlesticks are all white. You'll notice there's no indicators. There's no sort of price action like oscillators or anything like that. It's just the plain black and white charts. And the way that I trade is I go to the chart and look at where current market price is. So in this case, it was right here on this day. And then what I'll do is I'll find the most clear support resistance zones above and below price on the daily chart. So I use the daily and the weekly, but most of my analysis sits on the daily. Whenever I go to the daily, I don't zoom out really far like this. I go to the daily and then I zoom in on the past, usually 3 to 6 months of price data, because that's all you really need. Price is going to stop at one of the zones, even temporarily, and bounce most likely. And so it's very simple to draw these zones. So I look at current market price and I find the next clear zone above price is up here around this area, because it's super, super clear that price bounced right here as resistance. And then here again is resistance. It broke above, it came back and tested as support. Tried to make a new high, but failed, and then broke below the zone before coming all the way back up, testing and bouncing again, having a huge drop, and then coming all the way back up to where it was currently sitting whenever I first looked at this pair a couple days ago. The next clear zone below price is down here around these lows. So then what I do is I set 2 alerts. I set one alert at the next zone above price and one alert at the next zone below price. So in this case, I'd set the alert right here, and I'm going to click this plus button. We're in the replay mode on TradingView, and so it's not going to show the add alert. Instead, they substitute that in the replay mode on TradingView for just draw horizontal line. So I'll click that, and that'll serve as the alert. And I did the same thing for down here. I had an alert at these lows right here. Usually about halfway into the zone is where I'll put the alerts. And then all I do is I just wait for price to get to one of these zones. So let me show you exactly what happened, exactly how I called this trade, exactly how I managed it. So as price came up into this zone, I noticed it got into the zone, and then once it got into the zone, it started bouncing away a little bit. So what I did is I called out a sell on this trade. I will show you it right here. This is my live trading group in Discord where I share all of my exact specific trades. And if we go back into here, you can see where I call this trade. So this was on March 2nd, 2026. So today is March 6th, which is actually my birthday today. I'll just take a moment to say I started trading March 6th of 2016. Today is March 6th, 2026. As of today, I have been trading exactly 10 years. And it's kind of funny that literally 2 days ago, like, is the biggest trade of my trading career, almost at the exact 10-year mark of trading. I feel so grateful. I feel so lucky, and especially the fact that I'm able to give back by making videos like this on my YouTube channel and sharing my analysis and stuff for free in Telegram. But today I've been trading exactly 10 years, so that's kind of cool. Anyway, so I took this on March the 2nd, and you can see the way I called it in here. The way I do it is I just post a screenshot of my actual trading terminal. So this is, I guess you'd call it the chart terminal in MetaTrader 5. And then I post a screenshot of the actual trade right here with the entries, the margin that's used, the lot sizing, and the risk. And then I put it very simply in here. So it's 8:30 a.m. on March 2nd. I'm short on USDJPY, risking $100,000. So I did that. And then I had another trade here on GBP Canadian dollar right here that was running at the time. So I put them long GBP CAD, 25K risk for 50K profit. So as we continue, you can see what ended up happening. So GBP CAD went into a little bit of profit. So did USD JPY. The momentum continued. I did a live session in my Discord group. And then GBP CAD ended up hitting the stop loss for $25,000 of loss. And then now I was looking to buy again at some point. I've actually since gotten long again on GBP CAD, but I got long lower. We can actually discuss that here at the end of the video. But I want to focus on USD JPY. I was still holding it. It was around the entry. This was the next day, March 3rd. And you can see this is what it looked like. So I had sold here. It had gone up a little bit against me. And you see there's another entry right there, 43 lots, 2 positions at 43 lots. My broker limits me to 75 lots per individual entry with a maximum lot size of, I think it's like 500 or 750 lots or something like that. But I can only enter like up to 75 lots at a time. So that's why I have to break up the positions into individual entries. So that way I don't exceed that per trade lot size maximum. So I entered 2 more cells at 43 lots. And what that does is it added an additional $50,000 of risk to the trade. So you can see 7:49 a.m. here on the 3rd, which was about 24 hours after the first entry. So you can see I added shorts to USD JPY. The risk for these new entries is 50K. This brings the total risk for the USD JPY trade to $150,000 for a potential for $180,000 profit. So basically I'm risking 150K to try to make at least 150K, perhaps a little more even. So I was saying, I hope she falls. You know, I did another live session then, but I was still holding. So this all comes out. On March 4th, you can see it was going into even more profit and I was still holding, right? So I did little updates in here. And then you can see right here on March 4th, 2026, so 2 days after I entered the trade, at 7 p.m., basically, I put closing USD JPY here, a 1-to-1 risk-reward ratio from the risk, which is 150K profit, because I'd risked $150,000 on this trade. But after swaps and commissions, again, this was $150,000 minus the swaps and commissions, basically $134,000. So I put, this is one of the biggest trades of my career. And this right here is actually the last 5.5 months of trading history, or maybe like the last 5 months and 1 week. So almost the past 5.5 months of trading history. You can see I've taken this account from $350,000 and almost doubled it, of course, before swaps and commissions, because that eats into the profit. But I've almost doubled it by 350K deposit and then $331,000 of total profit before all the fees. And that was all good. And now I've since gotten into more trades. So I'm in 2 trades right now. We can discuss those here in a second. So with this being said, the reason I entered USD JPY was very simple. Price came up here into the resistance zone. And when it started to bounce, I started a short position. So we can see at the first moment it got there into the zone, it hit the zone, then started bouncing away. So I entered a sell. Cool. So it did that. And then what happened is the next day, it ended up going up a little bit higher. And after it started going up a little bit higher and turning around again, I added another sell position right there. And my stops were above this zone. But realistically, if it would have broken the zone and gone just above, I could have closed it likely at about at least halfway to the stop loss. So what would I have actually lost, even though I was risking $150,000 at the stop? That only would have been hit if price went all the way to the stop. Instead, what would likely have happened is it breaks above the zone. I lose maybe 50 to 80,000, right? So like somewhere around half of what the actual stop loss was, perhaps like 75K if I closed exactly halfway to the stop loss. So that's how the risk was structured. I had added to it because I knew that at this exact moment, this is the very peak, the very tip top of the resistance zone for where price was either going to bounce or break at. So I knew if the moment it broke above that recent high, if that happened, I could just close, I could take the loss, $50, $60, $70,000, just move on to the next trade. However, what ended up happening is it actually started to fall. So when we go here to the 1 hour chart, I entered the trades there, started going sideways, it started falling just a little bit, we went into profit. We started making some lower lows and lower highs, went into profit there around 70,000. It popped back up into the resistance zone around my entries, and then it hung out there for a little bit. It was going sideways there, popped up above. And as it was going down here, this started falling. We started going lower, lower, lower. And then right here, whenever price got to this area, this is also a previous little support resistance zone in the 1 hour. This is where I elected to close the trade because price was in a 1-to-1 risk reward ratio. Generally, I'll close my trades, like 90% of them, at around the 1-to-1 risk reward ratio mark. That just ensures that I'm actually getting profit targets hit and I'm making a little bit more on my winners than I lose on my losers. Most of the time when I lose, the trade doesn't actually hit the stop loss. I'm able to close in either a small profit or break even or a smaller loss than what the stop loss actually is. So if I'm risking, say, around $50,000 average risk per trade, that's what I risk on average. If I'm making at least $50,000 on each of those trades, I can have wins and losses. But whenever I lose, which is half the time roughly, I lose a smaller amount of money because I'm getting out of those trades a little earlier, right? If it's going towards the stop loss and I'm risking $50,000, I'll try to cut the trade around $20,000 or $30,000 of loss. Sometimes it's more, sometimes it even hits the stop loss, right? 1 out of every 4 or 5 trades actually goes and hits the stop loss, and I take the full unit of loss. But whenever price goes into profit, I usually hold those trades to the profit target of 1-to-1 risk to reward ratio. And this allows me to have full take profits hit when I'm right, and that's roughly half the time, right? Maybe 45%, 55%, something like that. It's roughly half the time. And I make more, and then whenever I lose the other half the time, I lose less. And that's the only way I'm profitable. I only make anywhere from 1 to 2 units of reward profit per month. So that means if I'm risking 50K per trade and I come out at the end of the month, I've taken like 10 trades or so. I win some, I lose some, but the conglomerate of my winners generally outweighs my losses most months out of the year. And I'll come out in 1 unit of profit. And in that case, that would be $50,000 profit for the month. In other cases, right, say I come out in 2 units of profit. If I'm risking an average of 50K per trade, then I'll come out on $100,000 profit on the month. And if I get to the end of the year and I can do anywhere from like 15 to 30 R cumulatively, that is an amazing year for me because I'm risking such high dollar amounts. And I feel like a lot of people really get the wrong idea because they think you need to have really big risk to reward ratios. People are trading small accounts expecting to grow an account from $100 to $100,000 over the course of, a couple weeks or a couple months or even a year. I think a lot of that's just unrealistic. And I think it really damages a trader's confidence because you're able to get into trades thinking that you're going to be able to grow the account so much when that's just not the reality. If you keep things really, really simple, you just buy and sell at support and resistance zones in the higher time frames, and then you manage them by getting out a little earlier when you're wrong and then holding them a little longer when you're right, you end up being able to make so much more money as compared to everybody else that's doing the complete opposite. They're holding their winners too long, they're holding their losses too long, and they're closing their winners way too early. And so their average loss outweighs their average win. When you pair that with a win rate that's like below 50%, it gets even worse, which is what a lot of high risk reward systems have. Systems where people are risking like 1 unit of risk to make 2 or 3 units of profit or more. That makes it very, very difficult for people to be able to be profitable long term. And so I believe 1-to-1 risk reward ratios are super nice, super easy, and it really allows you to build up a lot more confidence in trading and then soon efficiency and profitability. So with that said, I took this trade, I closed it right there. You can see the moment I called a closure on it was right here. Let's see. So I'm closing USDJPY here, and this was the price where I closed it at. So after it had just fallen away from the zone. The cool part about 1-to-1 risk reward ratio is this idea that you don't have to be a hero, like quote unquote. You don't have to be a hero, meaning you don't have to try to catch the next big move. You don't have to try to catch the next, 500 to 1,000 pip move, with huge bounces away from different regions on the chart. You just have to catch the small, pretty predictable price moves that bounce away from the zone. And if you do that, and you just do that over and over and over again, it is very scalable. Now, I've done this for 10 years, right? Trading is risky, and most people do, in fact, lose money. And so most people aren't ever going to be able to make it work. But I don't believe that's because people are stupid. I think people just are never taught a way to approach it that allows them to keep things simple and then structure risk in a responsible and proficient way. And I think that if more people learn how to do that, they learn how to keep things really simple, just use basic higher time frame support resistance zones, get into trades with a risk structure that makes sense, right? So you're risking how much you want per trade. You have a clear idea of exactly what you're risking. You have a clear area for potential profits. You're closing your losses a little bit earlier if they start going against you, and you're holding your winning trades all the way to a 1-to-1 risk reward ratio profit. I think we'd see a lot more people profitable. Now, I can't make that statement because the reality of the universe is very complicated, and I can't predict everything. But what I do know is that the people who work hard to keep things really simple and control risk, they generally get a lot better results as compared to people who don't, and people who have a complicated trading approach with tons of strategies and tons of indicators and high risk to reward ratios, and they're going on like 10 trade losing streaks before they finally get one winner. And on that one winner, they don't even make everything back after all the commissions and fees. It's just a nightmare to trade. Again, I know because I've done all that before, right? I've tested just about every single strategy you can find on YouTube, or at least some variation of it, using indicators, using Fibonacci, using Wyckoff, using ICT, SMT, like Wagyu beef, bullish, institutional, order block, liquidation, manipulation, candlestick strategies. I've tried all sorts of stupid stuff, and nothing has worked better than just super clean-cut black and white charts with just support resistance zones. And when you look at these charts in hindsight, you can realize how simple it really is. Because you see, yeah, it's a clear zone where price bounced multiple times before, and we just waited for it to get there. We sold at the zone, put a stop loss above and a target below, and then had a plan to manage it. If it went against us and started breaking the zone, we would close in a smaller loss than the stop loss. At least we tried to. Worst case scenario, the stop gets hit and the risk is still controlled, and we had risked whatever we were comfortable risking on that trade. And then in this case, it ended up dropping and it went down. So it either goes up or down. We either make a profit at a profit target, or we lose an amount that on average is smaller than whatever the winners are on average. And that's the beauty behind it. So that was the USD JPY trade. It's the biggest trade in my trading career, and I'm super, super happy about it. Now, I'll just cover these last two trades I'm in just to break this down even more. You can see this is a trade I called this morning on GBP NZD. You can see I'm actually on a weekly chart here, right? So you can still see this set up on the daily. I just went to the weekly because it was easier to send the screenshot out in my live trading group in Discord whenever I call this trade. And so you can see I entered right here. I put a stop above the zone and a target below. $50,000 risk for a $50,000 profit. If price goes down, I'll hold it to the profit target. And if it starts going up and breaks this zone, well, I'll just close it at a smaller loss. So instead of 50K, I might only lose like 25K. And I did the same thing here for this trade. On Euro Canadian dollar, this is you can see it's a weekly chart again. Price came down here into the support zone. We can see it was resistance once here, resistance a second time here, resistance a third time here, and then it broke above the zone, fell back and tested as support, bounced, and then now we've come back here in a nice big candle coming down into the zone. We're probably going to see a lot of people take profits here. We're probably going to see buy orders come into the market. And so this is a great place to buy. So I entered a buy, put a stop below, target above, risked $50,000 to go for $50,000. And that's that. That's all I have for you here in today's video. I hope this video was useful. If you liked the video, thank you. I appreciate that. I post a lot of stuff here on my YouTube channel about how I trade and covering live trades and recaps. And then I'm also posting every day in my free Telegram channel. So be sure to check that out. The link in the description or in the pinned comment. You can join my free Telegram channel, and perhaps it can help you simplify your trading and get profitable. See ya.